Hello everybody, welcome to another update on the stock screener. Today we are giving an update on Capstone Mining. So Capstone Mining has been falling 20% and almost 30% from the top, and it has rebounded a bit. So where do we stand now? Let's take a look at the copper price. We also see copper falling back to the $4 level, and it's now rebounding again. So let's go over the copper checklist and see where we stand now in the copper market. First off, the Killian Zhao economy index. We see still this cup formation, and the latest data says that we are pointing up. So I think in the long term, copper should be going higher. Copper gold ratio. We saw that the 10-year yield has been dropping a little bit here, but yeah, I think this will continue to rise. The Fed has announced that they would increase interest rates. Typically, they will only do that if they see yields rising. So I think that this is going to be stable and pointing upwards. So that's also positive for copper. But we need to see this change to the upside first. The warehouse levels, let's take a look here. LME has actually gone up in warehouse level, which is a bad sign. That means that there is enough copper here. The CME, the COMEX is dropping, so that's better. Let's take a look at Shanghai Inventories. And let's take 2 years. And you can see that the inventories went up, and now they are quickly coming down again. So this is actually a very good sign. That means that the Chinese are actually using the copper at their warehouses. And if it goes back to zero here, 30,000, then they will need to buy more copper. So I want to see this decline more, accelerate, and then probably copper will be rising again. So this is a good sign. We had seen inventory build. Now it's decreasing again. Power consumption. So Chinese power consumption is still high. It's about 12%. GDP growth should be elevated. This is another chart. So the latest May power consumption is actually higher than last year, still in an uptrend. So this is a good sign that China is still growing. Now, what is a bad sign is the credit impulse. We'll get to that later. So the credit impulse is actually cratering. This is a bad sign. So this is the latest number from May, and this is actually dropping below 50. So actually below zero. This is the right-hand side. This is left, so it's below zero now. So that means we will have a contraction in export orders in about next year. So this is a very important chart. think about this, we will see weakness probably next year when this credit impulse plays out. It could be still upside this year, but next year you should watch out. Be prepared for this. That's the same chart as here. This is the Fed chart. And this will probably go down and has implications for GDP of China, which will probably weaken a bit next year. Now the Shanghai Composite Index seems to be rising still. So in the long run, we have this pattern, and it seems that there's still chance that this will be broken to the upside. This will be very positive for commodities. GDP. This is US GDP is rising again. So this is good news. That means that the PMI will be rising in the USA, and they will also need copper. Now for supply and demand, we still have the strike at Escondida, but apparently BHP is able to cope with it. Kamoa-Kakula has started, will go to 400,000 tons next year. I think they are at 200,000 today. So this will add supply next year. Quellaveco will also add supply next year, about 300,000 tons. And China is going to release some stockpiles into the market. That's some new news. Don't know how much, but they have 2 million tons. I think China knows that copper is very important and they won't dump it all. So probably they are going to scare everyone and they are going to buy more on the dips. I think they have set a certain copper price in mind, around $3.5 to $4. They will buy at 3.5 and they will sell at probably 4.5, because that's the long-term price. $4 is the long-term price until 2025, when we have a massive shortage deficit coming in. This gap will need to be filled in 2025. For example, Audi is now saying that they will be all electric around 2026. So, I mean, you will need a lot of copper to do that. So here we would see a bit of surplus, and then here we will get into deficit again. So I would just wait a year or two and copper should be rising again here from 2023 onwards. Seasonality looks very good. So we are ending June right now. We are getting into July, August. So this should boost copper a bit. I think that this will do something like 4.5, and then it will drop again next year. Like this. Because next year we will have deficits turning into surplus. The COT report looks very good. So the shortest have been short covering 2 times already. So a lot of shorts have covered. So this is very good news for the copper price. We might have seen this short covering around here play it out. So probably will go higher based on this report. Australian dollar. Looks a bit weak. So it is actually going down right now, topping out at this resistance level. So that's not a good sign. And the Chinese yuan has also topped out. Also not a good sign. So we have seen a little bit of strength in the dollar, and that has hit commodities. Technicals are still looking good, but we could have corrections. The CRB index has been moving higher, but that's because of oil. And I think oil is going higher. So the CRB index will be going higher, and it will also take copper with it. Bulk shipping rates. So you see they are at the highs here. They show signs of topping here, but I think this trend is going to stay strong for a bit. So that's a good sign. Shipping rates point higher. Yeah, the daily says that we are topping out here on the stock market. But next year we could go up another 10%. It's not a lot, 10%. So this is actually searching for pennies in front of a steamroller. If you are in the stock market, you should get out at this moment. Wait for a dip, and then it will go higher. The same is for the copper market. They are all the same. Copper and stocks are the same. So we might be topping out here. But there's still upside of 10%. We also have some China numbers here. I'm not going to go over all of this, but if you glance over it, we are still in a growth phase. Charts are still moving higher, but at a slower pace. And in May, things are looking actually more to the downside. So yeah, growth is slowing in China, but we are still growing. Especially the producer price index, which will push up copper. Producer prices up, so inflation will be going up. So overall, this is pointing upwards, but at a slower pace. Inflation is still here. I think we will still have a lot of inflation coming in the end of the year. And the last index shows that we are topping out in growth. So this was about China dumping copper. They have dumped copper also in 2010, which is 10 years earlier. And now they're doing it again. 2 million tons of copper, some aluminum, and zinc. They don't expect that they will sell a lot of copper. It will be minimal. This is a nice chart on copper. You can see that capital expenditures are going to drop. So this should be positive for the copper price. Greenfield projects need at least $3.3. We are now at above $4, so I don't see a lot of downside here. 3.5 may be the absolute low here. So mine supply growth will go up a bit in the next years due to all those mines coming online, and then it will drop again. Now let's go over to Capstone. So Capstone Mining has actually some news on the June the 11th. They said that they would be creating the base shelf prospectus to get project debt. So probably they are going to get into debt, and the number should be 500 million. Well, they say here that they can offer common shares, but of course also debt securities, etc. So they are preparing to get money for the Santo Domingo project. This is actually good news. So they're doing something, and a lot of catalysts are coming in for the Santo Domingo project, announcing the partners. So this is going very well. Let's take a look at the valuations of Capstone. So today we are at copper price of 4.24, share price is 3.79, and you can see here that we are at the market cap of 1.5 billion. My valuation calculated with EBITDA of multiple of 5 says that we should be at 2 billion at this price. So there's still upside, and by next year we should be at 2.3 billion. So that's 50% upside to next year. And then of course they will construct Santo Domingo, and then we can shoot up from here to 6 billion. And with the cobalt project, this will go to 7 billion. So there's still an upside of 4-fold in this stock, which says that Capstone Mining is very undervalued. The price to book value is now at 1.5, which is not that high. So we are almost at book value, probably in a year or two. The earnings are around 273, so we have a PE of 5.5. This is not a bad company. This company earns a lot of money at 5.5 PE. Can you find me a company with a PE of 5.5? I don't think so. And it is still growing, because this is only the earnings from the 2 mines here. And this will grow to 440 million pounds in about 2 years from now. Well, let me just compare this with another miner, for example, Endeavour Silver. And just as an example, Endeavour Silver is producing 7 million ounces today. Okay, and they will increase production to 14 million ounces. So that's also a double in 2 years, exactly the same as Capstone Mining. But when we look at the valuation, this is the valuation. This gray line here. This gray line is using future AISC, future production, with a multiple of 5. So this is the valuation, the same valuation as this one when we have Santo Domingo in production at 2 times production. But where is the valuation right now? This is the market cap, the orange line, and this is actually higher than the gray line. So we are overvalued on this Endeavor silver mine. And when we compare this with Capstone Mining, the orange line is below this yellow line, much lower than this yellow line. Actually, 4 times lower, while Endeavor Silver is almost double this line. So just compare these two companies. Endeavor Silver is multiples overvalued as compared to Capstone Mining. So this tells me that Capstone Mining is really undervalued. You should buy it with both hands. And let's even say that copper is in a bear market and it would go to 3.5. Okay, 3.5 sounds reasonable. And we will never have electric cars anymore. We will stay with oil. Even then, at 3.5, this company is still going to 4.5 billion to 5 billion. So that's a threefold. Even at 3.5 copper, this is a threefold. Let's take $3. $3 copper. No copper mine will be built at $3. Even then, we will have a double in 2 years. We are still below this yellow line, while Endeavor Silver is already above this line at $3. So how low should we go? 2.5? Even at 2.5, it will go up. I mean, copper will never go to $2.5. That's for sure. So that means that Capstone Mining is a buy of all dips. Just buy all the dips. Because this market cap will go higher in 2 years. It will go to 4 billion, 5 billion, 6 billion. And let's say copper goes to $9, as some people say. Then it will go to 20 billion, which is a 15-fold or something. 15-fold. When we get into a deficit in 2025 to 2030. So I mean, this is a massive opportunity to buy, and I'll see you in the next video.